Welcome to the 129th season of the Canadian Club Toronto, Canada's podium. For over a century, this stage has united visionaries and leaders from politics, business, community, and the arts to share insights on the most pressing issues of our time. And with Canada in a pivotal moment, it's more important than ever that we come together.
We've been having important discussions and debates around this podium in this country for well over a century. I call this a historic podium of record.
Our club's always been a forum for visionaries, public figures, and decision makers to command attention to the issues of our time.
The Canadian Club is one of the most important podiums anywhere in the world that a Canadian can speak to, tell Canadians what it is that they think, develop those thoughts. And so I want to thank you for that very, very much.
Please join me in thanking our esteemed panelists today.
Through our programs and events, including our youth and young leaders programs, our diversity partnerships, our joint events, and our media and social media opportunities, we offer you access to dynamic political, social, and business figures from abroad and right here at home.
The platform from which the eloquence of Canada has flowed all of that time, whether it be business, education, politics, sports, arts and culture. If someone wants to say something to Canadians about this country and about the future of this country, this is the venue you choose.
Good afternoon once again, and welcome to those joining us online. My name is Shazanne Chu, President of Canadian Club Toronto, and your host today. Canada's prosperity depends on creating the conditions where innovation can thrive and businesses can scale with confidence. Yet complex tax structures, regulatory uncertainty, and compliance costs continue to weigh on investment and growth. Today's conversation explores these issues and the possibilities for meaningful modern reform. Our ability to host these important national discussions is made possible by the generosity of our partners. This event is part of our Canada's Next Move series, presented by Deloitte. Thank you for your continued leadership and support. Today's event sponsor is CPA Ontario. Thank you for your generous partnership and your commitment to advancing thoughtful public policy dialogue. To our season sponsor, Canadian Bankers Association, and our official airline sponsor, Air Canada, thank you. And to Canada's Forest Trust Corporation, our nature partner, who help us reduce our carbon footprint by planting a smart forest in our honor. We're grateful. Now let me take a moment to remind you of our website, canadianclub.org, where you can explore our on-demand content, event information, and how to become a member if you are not already. We also appreciate it when you share your reflections from today's event on social media. And now I'm sure you'll have questions about tax reform competitiveness and regulatory modernization. Please use the question cards on your tables, and we will share them with today's moderator. And for those joining us remotely, please click the Submit a Question button on the right side of your screen, and our team will be looking out for those as well. And now it is my pleasure to invite Carol Wilding, President and CEO of CPA Ontario, to formally introduce our panel and moderator. Carol, Canada's podium is yours.
Thank you.
Thank you.
Good afternoon, everyone. Whoops, hopefully you can hear me. Keep that there. Thank you, Shazanne, for the introduction and for getting us started. I'd actually like to open today's conversation with two quotes that were delivered just a few weeks apart. I start and I'll quote with, "We are in the midst of a rupture, not a transition," and quote, "We have to play cards we've been dealt, not the cards we had." The first quote, of course, is from Prime Minister Mark Carney's address at Davos in January, and the second is from a recent address by the Governor of the Bank of Canada, Tiff Macklem, where he laid out the forces that are reshaping the Canadian economy. Forces like trade disruption, AI, and demographics. Two speeches, one message. The world has changed, and complacency is no longer an option for Canada. Our public policy environment has not been fit for purpose for quite some time, and as a result, we're falling behind. Growth has practically stalled over the last decade. Business investment per worker has fallen to half of US levels, and productivity has stagnated. Real GDP per capita has barely improved. At the same time, the forces that are reshaping the Canadian and global economy are structural, not cyclical. Despite the fears of a bubble, AI isn't going anywhere. Global AI spending is expected to top $2 trillion in 2026, and 68% of global CEOs plan to increase AI spending this year. Despite the protectionist sentiment in the United States, global trade has grown in the past year, but grown around the United States with new agreements and deepening relationships. These are just a few examples of the seismic shifts shaking the foundations of an already weakened Canadian economy. Now is the time to take a hard, unflinching look at the pillars of public policy which serve as the cornerstone of that foundation. So today, to start that, Canada's tax system. As experts and advisors working at the highest levels in Canadian business and capital markets, CPAs know firsthand how tax policy can impact how and where businesses invest. When we asked Ontario CPAs their views on our tax system, the results were eye-opening. 82% agreed that the federal tax system is overly complicated, and 2/3 believe that Canada's tax system is a barrier to economic growth. Years of piecemeal tax policy has resulted in a dense, convoluted system that does not reflect the reality we face as a country. It's become a barrier to investment, innovation, and the economic growth that Canada desperately needs. Now is the time to take a hard look at that foundation. Be willing to take a fundamental first principles review of our tax system in light of the economy that we now find ourselves in. Last year, CPA Ontario released Tax Reform for Growth in Canada. The report lays out what a pro-growth, pro-productivity tax agenda for Canada could look like. You can learn more through your QR code that's on your tables, and I encourage you to have a read. Now, the 2025 federal budget took, I'll say, a few preliminary steps in the right direction. However, as I told the House of Commons Standing Committee on Finance earlier this month, we are still a long way off from where we need to be. The last comprehensive review of Canada's tax system was in the 1960s, and in the late 90s, our esteemed panelist, Dr. Jack Mintz, led a major review that sparked bipartisan action to improve the country's corporate tax competitiveness. But that was over 30 years ago. And as Governor Macklin said, we have to play the hand that we've been dealt, not the hand we once had. Canada can't compete in an intangibles-driven economy that's marked by AI and intellectual property with a 50-year-old tax system. If we want to attract the investment, the entrepreneurship, and the talent to grow our economy, create jobs, raise the standard of living for all Canadians, we must be bold, we must be ambitious, and willing to make the hard choices about what works, what doesn't, and what comes next. So to get our conversation started this afternoon, please join me in welcoming our panelists, who I invite to join me on stage when I say your name. I'll start with Fatima Laher, Deputy Chair and Board Director for Deloitte Canada and Chile. Dr. Jack Mintz, the President's Fellow of the School of Public Policy at the University of Calgary. Heather Schofield, CEO of the Canadian Tax Observatory. And leading this afternoon's conversation, it is my pleasure to welcome Patrick Brethauer, the editorials editor of the Globe and Mail. Welcome all, and I'll turn it over to Patrick.
I don't know if I need this or not. That's okay, I prefer it on the right anyways. So first of all, thanks everyone for coming to hear what I'm sure will be a fascinating discussion. And I want to jump into questions in just a moment, but Heather, just before we do, I understand you have an excellent new initiative on the way. Can you fill in the audience?
Sure. So the Canadian Tax Observatory, if you haven't heard of it, you've got to wait a little while because I'm just building it up. It's 6 months old. It's a new think tank on tax policy and looking at research and public engagement around tax policy that is pro-growth, pro-equality, pro-simplicity.
Well, we like all those things. That sounds amazing.
Thanks.
Thank you.
And I look forward to phoning you with many, many nerdy questions. So maybe, Heather, to throw the start of the first question to you, and sort of pivoting off some of the themes you just raised. If I look at federal budgets passed, there's a lot of talk of fairness, usually in association with tax increases, but a lot of talk of fairness. Is that an anachronism now as we face this new world where there's a big challenge in reigniting growth?
I don't think we would find anybody out there in the regular public who would think that fairness is an anachronism. I think it's table stakes pretty much for our Canadian society that wants to get along and actually show the world that we're a good place to invest. And so fairness is a fair topic still all the time. And I mean, for us to think that there's a trade-off between fairness and growth, I don't know. For me, they both go together. You can't have growth unless you've got a society that agrees, that's got some social cohesion. You can't have growth unless you have a society, in Canada in particular, that has great social services, healthcare, especially skills and training, and all of those come through a tax system paid for by all of us. So that conversation is far from dead, and I would say actually it's more alive than ever because we are in a situation right now where our economy is in huge turmoil, as we know. I mean, it's all around us. But even within our own economy, we've got a situation where we've got a K-shaped recovery coming out of the pandemic, or that even predates the pandemic in some circumstances, where we've got some very, very wealthy people, and we've got a whole bunch of other people who are talking, or it's at the top of every poll. Affordability is their key issue, and they are not seeing themselves in that conversation about growth. So I don't think that we're not even close to being able to put any of that aside.
And Fatima, what's your view on that question?
When I hear the word fairness, I try to understand from which stakeholder you're talking about. Canada really is a country, and I'm originally from South Africa, moved to Canada 25 years ago, so I can tell you about the benefits of being Canadian versus coming from other countries. What surprised me the most was obviously Canadians are, and maybe this shocks everybody, but Canadians are really proud to pay taxes. They're proud to pay it. It's just a question of how much, right? So in the context of fairness, both Canadians, residents and non-residents, are treated equally in Canada, and this is something we need to be really proud of, and they work very hard to maintain that. But does that actually translate into being competitive on the world stage? That's the question to be asked. Mm-hmm. And depending on which stakeholder you're talking about, we speak about trade-offs. Yeah, there are trade-offs. If you have a country that actually is a high-taxing country, it comes with costs, it comes with benefits. And we need to understand where we're actually going to be placing our bets. My view, and like I said, interesting enough, people may not know this fact, but in South Africa in 1999 was based on a source-based taxation system, which was open to a lot of manipulation and very few people paying tax. When it actually went through a transformation, and just for the record, South Africa's gone through almost 6 transformations in the last 30 years. And you just mentioned, Carol talk about the last comprehensive tax reform that happened in 1960, which is almost 5 decades ago, right? Coming to Canada, when I actually looked at what was actually happening on this side, I just said people are willing to pay their taxes. But the reality was, it's a high tax rate for the benefits that you get as a citizen. In South Africa, you didn't get any of it. No schooling, no healthcare, the list piles on, right? But what has actually happened is the fairness piece of it became a question. And if you go now, it actually has quite a huge emerging middle class, and there's a lot of innovation and entrepreneurship and modernization of the tax system. But remember, it's also a budding and new democracy. That's an excuse Canada does not have, right? Indeed. So it's things about being able to look at it from the different stakeholder perspectives to understand what's going to be good for us. And I mean, later on, we can share some examples of what I hear from my clients that are investing in Canada and what they go through.
Look forward to hearing that. And Jack, what's your view on whether that balance between fairness and growth is shifting?
Well, first of all, let me try to get to a bit of a definition. And what do we mean by fairness? And in fact, I taught public economics now for all my life, and I can tell you that when we talk about fairness, there's really two types of fairness. One is we sort of talk about horizontal equity, which is the equal treatment of equals. And I think sometimes that's where people get very, very angry, is when they see somebody else getting away without paying taxes. They have, let's say, the same income or relatively the same standard of living, but they're paying. And so they think the system may not be very fair. And that can happen, of course, when you have things like, business tax credits and things that some people get to enjoy and other people don't, et cetera. So I think that kind of fairness, I think, is something which one often talks about, and that's the issue of neutrality amongst people. And the other kind of fairness is what's called vertical equity, which is based on the ability to pay taxes. And I think when you look at, by the way, I've worked in a lot of countries around the world over time through the World Bank and the IMF. Canada does a pretty reasonable job in terms of redistributing income. In fact, if you look at our after-tax Gini coefficient,
Sure.
The Gini coefficient, just for definition, if it's zero, it means that every incomes are absolutely equal. And if it's one, that means somebody at the top has all the income. And actually, if you look at Canada, our after-tax Gini coefficient, compared to all the G7 countries, ours is actually lower now. And in fact, it has fallen since the year 2000. So the question, though, is, in my view, is that we're at a point in time where I think we have to think differently about the balance. We've had, since 2015, we've had virtually no growth in per capita GDP. Actually, I'd like using another concept called gross national income, because gross national income, you take out payments to foreigners and you add in income that Canadians get from abroad, which I think is a better measure of standard of living for people. But if you even look at the GNI, the gross national income measures, you see that Canada's been flat per capita. There are many reasons for that, but there's a paper I have coming out with Phil Cross. We go through all the different factors, but a key aspect has been investment, which was mentioned already. But the key point is that we're at a point now we have to worry about the growth side, because we've actually done a good job on the redistribution side. And I got a paper coming out next week or the following week, I'm not quite sure the timing yet, with the CD Howe. It's a major tax reform paper. But the focus is really on economic growth while doing a tax reform which is distributionally neutral. Because right now, it's not redistribution that we need. We do a lot of it already. What we need instead is getting more economic growth in this economy. And I think tax reform has to focus on that right now.
Great. Well, thanks for that. I wanted to turn to some specifics now. Maybe, Fadiman, to start with you. I'm wondering if we're thinking about specific taxes or regulations that we would need to change in order to galvanize growth. What's at the top of your list?
Oh, God, I could sit here for hours.
We all have hours. That's fine.
We also mentioned that, we've had the last reform we actually had was in 1960, and then that was a comprehensive tax reform in Canada. And there's been sort of changes along the way. I mean, when Brian Mulroney was in power, he introduced the GST, and that was a good thing. And then we had certain changes under Paul Martin, and then again under Harper. But if you think of our tax, and I use the word code, and now I understand why it's code. It's because it allows people like Deloitte to be in business, because you need to actually have people navigate through this. The Tax Act in 1917 was 6 pages long. It is now 4,000 pages. And there's regulations. And one particular one, and maybe people may not be aware of it, I will talk about it, and a lot of my colleagues at the table are fully aware of what we did. There was one particular legislation, which is Section 153, that is about a withholding tax. And obviously, if you think about this legislation being implemented in the 60s, business travel was really not something that people did a lot. And now it's, you cross the border all the time. Canada actually had a very insane rule that anytime somebody crosses the border, the company had an obligation to withhold and remit taxes. Now sit back and think about large multinationals getting people to come. So organizations were inadvertently not compliant without even knowing it. So they weren't really trying to not pay tax or be compliant, but they were inadvertently non-compliant. What was really good about this particular legislation, what it forced major professional firms, as well as some of our clients, to basically advocate with government and work with finance and CRA to make a tax change. It took 9 years. We did get it through, and it was not a very controversial or combative change. It was really necessary because it was really working against investments in Canada, where most multinationals were saying, we much prefer being in the US and coming into Canada, and it was becoming quite onerous. What companies would even say, why don't you let us just pay the penalties, but took the compliance burden away from us? And CRA couldn't wrap their heads around it. They just couldn't do it. Now that's one example that I'm talking about, and I'll give you a practical example. Large IT company with probably 5,000 or 6,000 people crossing borders between parts of the world in Canada. It would have cost them something like $100 million a year just to maintain an infrastructure for people that are not taxable. So just understand that. So what they said, let's just pay the penalties. You keep the money, government, but can you just let us do this? And the minute somebody becomes taxable, we'll work with it. They couldn't wrap their head around it. And because the legislation and the regulations were not in support of being pragmatic, we had to actually go through this process. But like I said, 9 years to change it. Now, that's one example, and if you go through the whole Tax Act, there's probably many, and I know my colleague, Cheryl's sitting here, we talk about government incentives. There's a lot of great things we do, but we don't actually look, and I mean, in business, we all talk about proof of concept. We'd hope that government would do that. So the regulation, bureaucracy, and red tape must be addressed. I'll use one more example with a lot of these multinationals where they operate in probably hundreds of countries across the world. When Canada gets compared to Brazil and India, then you've got to know we're actually not that friendly. So attracting investments means that we actually do need to address it. And I don't really think it's a problem for government on itself. I really do believe private sector needs to work with government to actually resolve these issues because it benefits the entire country.
Thank you for that valuable and somewhat frightening insight. And Jack, what would be, I guess to an extent I'm asking you to scoop yourself, but what would be at the top of your tax to-do list?
Well, first of all, I want to tell Fatima that in all the countries I've worked in, India and Brazil is one of the worst, but there's some really good ones too, like them. And so it's if Canada's getting that reputation, I would be very worried, actually. And the other, but I should mention that you should be happy that compared to trying to start the operation of a mine, going from discovery to a mine, 9 years is just half of that life. So
half, a third.
No, actually, it's
18.
It's about 19, 20 years. So anyway,
there we go.
Third highest in the world. So anyway, not as bad as Zambia. Good news. Anyway, now just in terms of why I think we need to focus on pro-growth is we have 3 issues that I think have developed in the way that we've run the tax system over the years that I think really need focus. The first one is that Canada relies exceptionally high, a great deal, on personal income taxation to fund public services. Now, I agree with Heather, public services are really important to fund. In fact, the way that one approaches tax policy is to say, okay, if the government needs to raise a certain amount of revenue, what's the best tax structure to get? And in fact, it goes back to an old saying that you want to pluck the feathers of a goose to have the least amount of hissing possible. But I think that when you look at the personal income tax in Canada, it's not only high relative to gross national income, which a lot of people measure, but we've actually looked at, using OECD data, we actually looked at all the different income groups, going from 1/2 of median income, and 1.5 times median income. And actually, compared to all the G7 countries, we have a higher amount of taxes as a share of earnings compared to any other G7 country. That's remarkable, and that's because we have relatively high rates, but they're also applied at relatively low levels of income in terms of the thresholds. And I'm not just talking about the top rate, I'm also talking about the other rates as well. And so we've relied way too much on personal taxes. The other issue that we've had is that we've let our corporate tax advantage slip. By 2012, we had, actually, we brought our average federal provincial statutory rate down from 39% to 26%, the federal provincial one, the combined one. We did a lot of base broadening as well. Over the years, I have to admit, I've been part of that discussion going back to the Wilson budget in 1985, which I was involved in at that point. And we've done a lot of very good changes. And as a result, Canada looked quite competitive for capital in Canada, at least from a tax perspective. There's other factors that influence investment, no question about that. But at least from the tax point of view, which does have some impact, we are quite competitive. And I've always argued that Canada being kind of a small population dispersed over a very big country along a border, and as well as the cold climate, we have natural disadvantages, and we have to use our policy smartness in order to overcome those disadvantages. And I thought we did that with our corporate tax reforms and that we, over the past number of years. But since 2012, we've lost that. We know since, especially with the U.S. reform that started January 1st, 2018, but especially with the U.S. reform, but also other countries, we're now kind of more above the average now amongst the OECD countries in terms of the statutory rates. We still have some very significant incentives, primarily for manufacturing. By the way, we're the only OECD country that has a huge difference between manufacturing effective tax rates and other sectors of the economy. And in fact, that goes back to 1972 when we were responding to US changes at that time. But it's been something that's been around for a very long time. We keep giving a lot of subsidies and tax preferences towards the manufacturing sector, but unfortunately, it hasn't really stopped the decline of the manufacturing sector.
I would add also big checks, too.
Well, that's what I'm saying. That's what I meant by subsidies. The business subsidies, but also the tax preferences, the combination of the two. And so we haven't succeeded. In fact, we've put money into the slow growth sector of the economy, while other countries have been, especially the United States, as you see, they've actually have bigger preferences towards the technology sector, which has been growing quite phenomenally lately. So we need to reestablish that corporate tax advantage that we've had. My view is we need to get some more neutrality in the system. We've got to get even further lower rates. And in fact, I have another proposal, which I've talked about as a big bang proposal. In fact, that's what I call it. We need big bang tax reform generally for this country. And the third one, and I'll be brief on this one, we have the wrong mix of taxes. Not only do we rely too much on income taxation, personal and corporate, but we, compared to other countries, we don't rely enough on payroll and the goods and services tax.
Sure.
And in fact, one of the things that worries me about the goods and services tax is not only do we not keep, we have a relatively low rate for value-added tax in Canada, 13% on, if you include the HST, of course, but we've been whittling away that base.
Sure.
With latest now is housing. We now have to take the GST off new housing. We've whittled it so much that we only tax half the portion of consumption under the GST, and so we're making a mess out of the GST. We could actually have more payroll taxes, especially to fund healthcare, like a number of countries have done, and so there's a number of things that we could do to change that mix away from the personal income tax without necessarily reducing the amount of total taxes to be paid by Canadians.
Interesting. And Heather, what's your view as to what's at the top of the to-do list as far as changing taxes?
So yeah, my wish list. If we're looking at growth, I think we have to look really hard at why it is we're not growing and why it is that how it is that we're going to deal with what's happening in the United States. And so, okay, yes, on competitiveness, over the years, we have been very, very worried about our corporate tax rate compared to theirs. And, the last budget showed that we were just fine on that account. The Tax Foundation in the United States also placed us 13th in the world in terms of tax competitiveness. The United States was number 15 when all the taxes are taken and rolled up in a ball together. But we still have this problem within our country of unequal growth, low growth, and a productivity issue. So I think we really do need to look hard at why that is and how we can use the tax policy as a tool to actually improve that productivity. Does that mean investments of any kind, or does it mean investments, driving investment in initiatives that actually create things and make us better in terms of how we can produce and our capacity to produce, and not just moving money around in terms of mergers and acquisitions or inviting foreign companies in to take over our companies here, but actually driving new and interesting or better initiatives within the companies or in the structures that we're already really good at. So what does that mean exactly in terms of tax policy? I think, if we look at, in the last budget, there were a couple examples, the accelerated capital cost allowance, for example, and making it more immediate, making it more specific for companies that are actually doing things to produce more and to produce more efficiently. That works. Investment tax credits, for example, that reward investment in a specific thing, that works, especially if they're well targeted in an area that has promise. Going forward, should we be looking at things like flow-through shares beyond where they actually exist, so that investors can see, and there's actually an incentive there to create something. There are a lot of ideas around there, but we don't yet have, I think, a unity of thought in the country, or there's not a drive towards that. There's just this general, discussion around let's just bring in investment, but not all investment is created equal. So let's target that really hard and make sure that we use our tax policy as an efficient tool in that respect.
Can I add something on that?
Please do.
I do think the way we talk needs to be changed. The narratives on tax needs to change, in my view. When we talk about reform, my view would be we need to talk and use words like modernizing our systems, because that is less in your face. The minute you say reform, people, they basically go back into their shell and just think of work and, oh my God, what's going to happen? But we at a time, obviously Kanye's speech at Davos was outstanding. We always say that the world is looking for a country to be that beacon of hope, and that's us. And in the context of trying to become that beacon of hope, we've also got to make it friendly and investor friendly, which means we actually have to have opportunities for people to want to be investing in Canada. And when you look at our industries and the sectors, there are two industries where there's a lot of investment. That is in the oil and gas, and that's in energy. The question is, why not all the other industries? And that's because there's no incentive for people to bring it here. And the competitiveness, I know we are great. Like I said, if you compare where Canada is compared to the rest of the world, we've got a lot to be thankful for. Bono says it best, the world needs more Canada, for sure. But we've also got to become pragmatic. And just the way, technology needs to be embraced, AI, generative AI, the user experience, whether it's personal tax or corporate tax, time to actually change things. When a proposal gets put in the budget and the time it gets implemented, it's 2-3 years later. And then you've got the next government in place. So there's no certainty. So I think it's very, very important that instead of doing things very piecemeal, it needs to be done with a strategy. We talk about a growth agenda, but we don't have a plan. And most organizations and businesses will say that if you don't have a strategy and a plan, you can't really execute against anything. So the question really here is, what are we executing against, and what's the goal? And sometimes it just needs to be bite sizes. Few major things that gets done that the consumer and the citizens of the country can experience and feel it.
So you're advocating a fairly narrow front then. Interesting. Can I want to get to the Big Bang in 1 second. And you may, Jack, I think my next question may give you sort of a vehicle for what you want to say. So what are you, Jack, you were talking about the need to sort of essentially cut taxes on investment but raise taxes on consumption, which I'm guessing would not be possibly the highest polling idea in the history of opinion polling. So how do we balance, or how do we resolve the idea that the best thing to do is quite very likely in the short term the most unpopular thing to do?
Well, I think first of all, let me start from a different premise and get to your question. And one where I'm going to disagree with both the other panelists here. I actually very strongly disagree with industrial policy. I think we do not know what are going to be the kind of things that are going to allow people to grow. And I've always taken the view that governments cannot pick winners and losers. In fact, losers like picking governments because that's the way you can get your hand.
So you're not a fan of cucumber factories in Newfoundland?
Oh yes, and also remember the Brooklyn and you can go through a bunch of stories. My point is that that's why I've always been a true believer, going back to policies that we have been pursuing really for over 50 years, which is let's try to keep rates low, let's try to have neutrality in the system, and let the private sector kind of figure out where to invest, because I think that's actually what the way that you best grow the economy. And in fact, I don't think taxes is the only factor. I think some of the things that are hurting investment today are beyond that. Take, for example, in our numbers, oil and gas, by the way, is the most heavily taxed sector in the economy. And so, yes, investment is taking place there, but actually really not that much greenfield investment. A lot of it is just sustaining investment, right? And so it's not really a growing industry right now, partly because of more affected by regulations and other things that are happening. Mining has very low levels of taxation on it compared to other sectors. I can go at length about the critical mining incentive, which is only provided through flow-through shares, which I think is extremely complex and great for the rich. I mean, the rich love flow-through shares because they can get all these tax benefits associated with it. They don't care if they make any money on the equity shares because the government picks up almost 90% of the cost of the flow-through share. So I mean, it's not exactly really the way that you want to run the ship. So I think we have to be very careful about how we really think about taxes. But I think in the past we've done very well in productivity by actually having a tax system that has been more neutral and keeping rates as low as possible. And that's why the corporate tax reform was actually quite successful. Now, going to the Big Bang reform, I totally agree with you that it's not an easy sell to say we're going to tax consumption and more heavily tax income. But we have to remember that there are options. And how you do it can matter a lot. Years ago, we wrote a paper on how to bring in an HST in Alberta. An 8% HST there, on top of the 5%, would raise $8 billion in revenue. You can raise the personal exemption to $55,000 per person. 80% of Albertans would no longer pay the personal income tax, which then would become a high income tax in Alberta. You could lower, at that time, we had a small cut to corporate and personal taxes in the numbers, and we still had $1 billion left over that could go to other things, as well as a low income tax credit on top of it. So, and it was distributionally neutral, and yet it would have a huge bang on the economy. And when you look around the world, in countries like Ireland and Switzerland and others, they have been able to achieve tax systems that really are very conducive to growth. And I think we could do that, the same thing in Canada. And well, wait till my paper comes up.
Excellent. I want to give Heather and Fatima a chance to touch on that question, and then we have a couple questions from the audience as well. So the politics of selling tax change.
Oh, they're very, very difficult. I mean, so I think it's a fun intellectual exercise to think that, okay, you can come to the table with your big corporate tax cut, and I will come to the table with my tax cut over here, and we'll trade them back and forth, and it'll be fine. But that is not the way the world works. And we've got some pretty big fiscal challenges in front of us. The federal government, for example, is on a very ambitious defense trajectory that's just going to cost a lot of money. Are we even having that conversation about where that money is going to come from? A little bit, but not fully and completely. And that is laden with discussion about should taxes go up or should they be different? And it immediately becomes very complex. you know, if the choice is between shifting taxation away from income and over to consumption, we're forgetting about wealth in that equation, which is where all the momentum is right now. And so I think that has to come into the discussion as well. And again, it gets very complex. I can imagine a bunch of people sitting around the table and doing some horse trading, and then we've got a whole bunch of consumption taxes going up over here, and then it hits the public who is not happy about affordability, who's dealing with inequality, and you're going to tell them that their GST is going up? I don't think so. Yeah. And then you've also got every lobbyist anywhere coming to you and saying, okay, so there should be an exemption, right? In the name of fairness, there should be an exemption here and there should be an exemption there. So come back to me in 10 years after we've dealt with all these other things and we may have a package.
And Fatima, what's your view?
There's a lot to unpack, I think. Yeah. The reality is, I think from my observations of how we've been operating in Canada is we don't want to fix something that's not broken. But that's actually not the way it should be. I really do believe we need to be seriously thinking about how do we, invest in a growth agenda. I agree with you, Dr. Mintz. I mean, some areas you've said, especially looking at Ireland, some of the examples across the world, there's some great examples of what they've done to basically transform their countries, especially from a growth perspective and driving more economic growth. But I find what's happening, we get paralyzed by over-analyzing situations versus sometimes just taking the plunge and doing it. Mm-hmm. Because it's, you've only failed when you've given up. And innovation and experimentation is important in the process. You cannot have something like 100% or strive for perfection because that's absolutely impossible. So we write papers, we give explanations, we do the analysis, but then it goes nowhere. So we've got to start. I mean, there's lots of good things in our tax code. There's lots of things that can be done, but it's complex. We said the average person doesn't understand it. That's why I use the word modernize. I mean, the tax system should be a system that anybody should be able to understand, not where you've got to hire expensive lawyers and accountants to navigate it.
Agreed.
I think that's really important. So we talk about the wealth disparity. I mean, last year, $52 billion was spent on compliance cost. $52 billion. I mean, what about that money being challenged into innovation and investments? So the Auditor General even said that when she looked at the tax revenue that's coming in, the clear accountability of how it's spent and what the ROI on it wasn't even done. So how do you make decisions when you don't even know where it's going, right? So I think it's a little bit about taking a step back, taking a breather, and seek the advice. And I really do think this is where there needs to be partnerships with public sector and private sector. And not to make money. I think it's really about for the prosperity of the country. That's what's important.
Thank you for that. Now, we do have a couple of questions from the audience. These two are sort of, I think, loosely thematically tied. I'll paraphrase it, but given the propensity of companies to pay their profits back through dividends or share buybacks, what is the case for cutting corporate taxes? Won't that be, if it simply flows back through dividends or share buybacks, isn't that a fruitless exercise? Whoever wants to tackle that.
Okay.
Jack?
Since you're looking at me, but anyway.
Well, I was looking down the line. Certainly I wasn't.
I don't. Maybe I just felt self-conscious on that one. Anyway, well, first of all, that argument has often been made, but I think we have to kind of look at really what the story is. First of all, dividends and share buybacks are always going to be paid to investors. I mean, it's a way of bringing money back to to the investors. I mean, if they didn't get anything, then why would they invest in the company? Sure. And why would the company be able to have any money for investment? So really what you need to do is look at investment and what's happening there. And of course, what's happened in the oil and gas sector is a perfect example. They've been doing a lot of share buybacks, and particularly over the years. Share buybacks are a very easy way, by the way, of passing on income, because when you have volatile profits, you can shut it off any time, unlike dividends, which is much more difficult. Sure. But the main point is that they did it because they didn't have a lot of investment opportunities.
Yeah.
And so I think when you look at the economic studies that have been done on the impact of various factors that influence investment, and there's a huge number of factors that play a role, and I've always argued lately regulation in Canada, I think, is a bigger factor right now than the tax side. But on the tax side, it does have an impact. It does encourage investment. In fact, after the corporate tax reform starting in 2000, we did see a significant impact on investment, even taking into account other factors that influenced it. And so my view is that, yes, it has an impact. And it's not so much the competitiveness impact as much as just trying to improve the rates of return that people can earn on new ventures. And if you tax it away, then people are not going to invest.
I know we're already eating past our time so quickly, Fatima, and then Heather, what are your views on whether there's any upside to cutting corporate taxes?
Tremendous upside. I agree with Dr. Mintz.
That is right to the point. Yeah. And Heather, last word to you.
I think we've done enough on that front. I think we're competitive on our corporate taxes, and I think we've got to be far more precise in how we look at fueling growth and driving investment.
Great. I just want to thank our panelists for a fascinating discussion. Thank you very much.
Thank you all for that thoughtful discussion. On behalf of Canadian Club Toronto, Heather, Fatima, Jack, that was a spicy conversation on unpacking the trade-offs between fairness and growth, so thank you. And Patrick, phenomenal moderation, thank you so much. Thank you again to Deloitte for presenting our Canada's Next Move series, and to CPA Ontario for sponsoring today's event. We also thank our production partner, VVC Live, for their outstanding support. Now, before we conclude, I invite you to join us at a couple of our upcoming events. On February 26th, we welcome the Honorable Dominique LeBlanc to our podium for what promises to be an important and timely conversation. And on March 11th, we feature a discussion with members of the Indigenous Advisory Council of the Major Projects Office, examining the evolving role of Indigenous leadership in nationally significant infrastructure and major projects. Members and guests, thank you for being a part of our discussion. We look forward to welcoming you again soon. Have a wonderful afternoon.